Let's wait a bit more. So as it seems, we are live now on YouTube and Twitch. So here we go, podcast number 3, episode number 3 of the Rise podcast. And we are live with Talion and Kelvin right now.
Hello everyone.
Today we're going to cover a bit what happened since the last podcast, which was about the CPI that came out from the US.
Right after CPI.
Just a little bit happened since then, not too much. Price was fucking around quite a bit. But now we want to focus probably on what is happening next. But first, as I said, we probably want to cover a bit what happened. We got a bunch of data points coming out from Europe with the CPI from Europe, CPI from Canada. It was pretty much all in line, a bit down in Europe, what I saw, but not too surprising. We had retail sales from the US, which was up quite a bit last week. We had CPI from Japan, which was just in line as expected. We had BOJ interest rate decision, which was no change, which was not as expected. We had ECB yesterday, which was also no change. They didn't hike, they didn't cut. They dropped a bit though. The hawkish stance, in my opinion, in the statement, also Lagarde was probably more dovish than some expected it. What else did we have? We had PMIs from Europe and PMIs from UK and PMIs from the US on Wednesday, 2 days ago.
Like the surprising part of those PMIs was that the US is again diverging away from everyone else towards strength.
As you can see here, I think you should see it on the screen. It's rising.
Yeah.
Manufacturing
above 50 both.
Yeah. Well,
so
services is even accelerating to the upside, above 50. And as you can see,
even manufacturing is above 50, like 50.3.
Yeah, manufacturing is 50.
There's month-on-month expansion. And I remember commentary in both of them. The commentary was that the price pressures were actually low.
Yeah.
So there's growth, but there is no price pressures.
Yeah. Yeah, it's just Goldilocks territory for risk, as we have good growth and low inflation pressure. So that is really, really good. As you can see here, the bunch of European PMIs is pretty much to the downside. If we look at the Euro ones, services is dropping, which is pretty much no surprise. It's just a lagging indicator a bit to the manufacturing one, or you have to say the sector is lagging a bit to the manufacturing one. Manufacturing is bouncing a bit, but it's still way below 50, so it's still in contractory territory. It's just slower. Right? UK is up, which was to me was quite some surprise.
Better than expectation stuff happening in Europe, but everything is still in the contraction territory.
Yes.
Better than expected, but still below 50. All of them are contracting.
Yeah, it's not looking good in Europe, to be honest.
UK, except UK. Yes.
Yeah, UK for me was quite surprised to see those PMIs coming up, actually way above 50. I mean, services accelerating above 50 again. It's quite some surprise to me. Manufacturing bouncing still below 50, but that is no surprise. But that's still good. That's good numbers out of the UK, which is to me a bit of a surprise. But we have to be a bit careful. It's still preliminary numbers, so we gotta see what those are telling us. Jobless claims weekly, last week and this week, still strong, right? No indication in the labor market that this is giving in or anything. We had a new low in jobless claims weekly last week, initial jobless claims. This week is up a bit, not too much, but we had...
continuing claims are still fine.
Yeah, they are just about right, in my opinion. It's just sort of sideways. Durable goods orders was quite strong. And then we had the GDP reading yesterday, which was really, really strong as well. But
really good.
We have to say the deflation part in it was down quite a bit. I mean, it was like 1.5% or something like that.
I mean, that's what causes the real GDP to go up,
Yeah.
The real growth is nominal growth minus inflation. So when the inflation component goes down, the real growth component goes up. So the real surprise in that GDP data was that inflation is lower than preliminary calculations, expectations, whatever.
So overall, we
And
have to
I
say,
think this is important to note right here in GDP data. We are getting revisions down in inflation. So mid-February, we should get annual revisions to CPI data. I believe it was Waller who was saying that, okay, we will get the revisions to CPI in mid-February, and Fed will look at that, and he flagged that as important. He said, Fed will look at that to determine, well, in future inflation projections determine the future real rate. So they want to keep the real rate, the amount of the pressure that the rates are putting on inflation is rather stable. So if the inflation gets revised down, real rates go up. So that will push them to cut faster. So this is curious. We're getting more and more evidence that even past inflation was not as bad as thought. Like the last quarter and PCE today.
yeah,
So
PCE today.
this, like the quarterly inflation data, I think is important because that's going to matter in mid-February when we get CPI revisions for the year.
Definitely. I see it the same. Inflation data overall just points to the downside. There is no sign that inflation is going to go up.
Yeah, like
again.
it looks like inflation is just simply normalizing.
Yeah,
Things are returning to normal in inflation
it's
front.
cooling off.
Growth
It's
is outperforming. Inflation is just returning to stability.
yeah, 100%. I mean, that is just soft landing data that we get here.
And that's perfect Goldilocks.
It's just
Everything is
everything
great.
is just
Everything
fine.
is fantastic.
And that is why risk is going up as well, right? So let's look at markets probably. So
Oh yeah, we should touch upon the surprise from Tokyo CPI
from Tokyo
overnight.
CPI, that was
1.6 year over year in January.
Yeah, to the downside a bit, but I don't think it matters too much. I mean, what the BOJ is looking at is the upcoming
wage negotiations
in the spring. So I don't think they're going to look at CPI too much, but we can cover the yen anyway, because that is hit hard again. I mean, obviously, it was such an obvious trade, for at least for me. I think we talked about it the last time as well. I think the yen is still going to get hammered, and it's just like that. But yeah, let's probably just first cover the big part, which is, in my opinion, bonds. And you think that as well, I think. So currently, let's look at the 10-year. I mean, that is sort of the mix in here, right, between short and the long end. Since last time.
Yeah, it's benchmark.
Yeah. So last time, the last podcast was on Friday, 12th January. So it was right here. We closed around 3.9%. And now we're up at 4.15%. So we're up quite a bit here. So what happened in between?
Look at everything. Like I'm looking at so the bond rally started with the quarterly refunding statement, the 30th of October, and so like you put the FIBA levels on the quarterly rally. So we are just a typical decision point at 0.382 level of the FIBA, like the second level.
Yeah.
Like even TLT is right there. A lot of things are just right there. Like the decision point about the next quarter. And we are approaching the decision point from the treasury about the next quarter. And the trend, whether continues or just, pushes up and yields, that's the question now. We have arrived there.
Yeah. Well, we just have to say probably. Bonds are down at the moment. Yields are up in the last couple of days just because data is just outperforming every expectations out of the US, especially the labor market, right? Which is just
we had supply.
Yeah,
and we had some supply.
It's just too tight. We had a lot of auctions this week. It was like 160 billion, I think.
160 billion this week, yes.
Yeah, so 2 year.
Did we get the reverse repo number for today?
The what?
What time is it? No, it's a bit early now. We wouldn't have got this yet.
I didn't get it yet,
We
but
should get it. We should get it soon.
it was around 650 billion in the last couple of days, and around, I don't know, 85 or so counterparties. It's dropping.
Yesterday
So
it was 557 billion. Yesterday it was 500. Okay, we had 160 billion supply. Yesterday we had 60. No, yesterday we had 40. The day before 60. The day before 40. So that's eating up the reverse repo. But it was 600 something, like you said, and then we had supply, and then it dropped like 100 billion because we had 100 billion supply.
It makes
And
perfect
we did
sense.
yesterday's supply should be hitting today. So
Yeah.
that's why I was wondering, did we go to like 520, 530 or something?
So the 550 is for today already.
That's yesterday.
Oh, it was yesterday.
557 was yesterday, yeah. Today, I am guessing we will get 530, 520,
Yeah, something
like
around
that.
there would
We
make
will
sense.
see.
It would
Yeah.
make sense.
But we will see, because yesterday's supply was 7 years, so it doesn't necessarily have to hit on the reverse repo front that much. But we will see.
Yeah, there's still quite some time to the downside until we run to around zero, and then we should have some more time until we get serious problems or serious changes. We are looking forward, as you said. Next week is, I think, on Wednesday.
Let me put the whole timeline for the bonds for the next week. On the 29th, which is Monday, we're getting at 3 p.m. Eastern time, Monday. Treasury is going to release their quarterly issuance estimate for the next 2 quarters. They have the estimate for the upcoming quarter and the quarter after that, and they're going to revise the upcoming quarter and issue the estimate for the quarter after that. That's going to affect the market. Last time, when we got that number, we knew Treasury was going to issue roughly 100 billion or so less in the last quarter than the estimate. The bonds reacted immediately. So that's the first phase. 29th, Monday, 3 p.m. 31st, before the FOMC day, before we get to FOMC, we have around 8:30 a.m. or so, we have the actual details of the refunding. So how much Treasury is going to issue on across the curve, different maturities. That's going to be big. Everyone is very, very skittish about bonds into this refunding because everybody's expecting Yellen to actually start leaning on the long end now. And if she does or if she doesn't, will determine the next leg in bonds. I can't say I'm certain about that, but that's what I'm betting on, and I'm pretty confident about that assessment. Then we have FOMC, then we have NFP.
Yeah, big week next week, like really, really big. There's a lot of data risk next week.
Rates fund, there's everything is next week. Rates fund, we get like a year happens in a week, We're getting everything.
It feels like that, and I mean, we could have, if things go okay. Let's get over the 2 possible scenarios. One scenario is going everything into the bond direction to the upside, and the other thing would be
everything is perfect
it.
outcome. Perfect outcome would be the Treasury does not increase their issuance estimates. The Treasury does not lean on the long end. Treasury signals that they have no need to increase the longer duration issuance from now on, that everything is done. They do not expect, even in the future quarters. Oh, also, I did not say this before, we are getting the details of the buyback program finally on the 31st. I saw this on the Treasury website, 31st, we are getting the timing and the magnitudes of the buyback program. FOMC day on 8:30 a.m. or somewhere before the markets open, we're getting the details of the buyback program as well. So let me say what the Treasury itself has published about their buyback program. Okay.
That's quite a bit. And then we get FOMC. Of course, the best outcome for bonds would be that the FOMC is dropping some more dovish stance. So they say, okay, we're going for a March cut. straight away. I mean, of course,
Oh yeah, so the Treasury says that they will buy in 9 buckets across the curve. Bucket one is like, maturity 0 to 2 years. Bucket two is 2 to 3, and then
Yes.
bucket seven is 20 to 30, and bucket eight is tips 0 to 7.5, and bucket nine is 7.5 to 30 and tips. And their plan is for cash management and for improvement of liquidity. And they're saying if something has a relatively good value, that is not going to get buyback. If something has a relatively poor value, that's going to get buyback for liquidity purposes.
So that will
And we
probably
will
mean
finally,
that probably means they're gonna lean on a 20-year because that has.
yes, that's what I think, because that's the worst liquidity part. Like the front has good liquidity. That's why they're leaning heavily even now on the front.
That would make a lot of
And
sense.
yeah, the buybacks last October 31st, they announced officially. The next quarterly refunding announcement will take place on January 31st, 2024. And this last quarter, Treasury received important feedback from the primary dealers with regard to scheduling buyback operations for liquidity support and cash management purposes. Treasury intends to provide an update on the timing for implementing the regular buyback program in the next quarterly refunding announcement. That's going to take place January 1st, 2024. So that is another thing that can go well or poorly for the Treasury.
Yeah.
And the last piece, before we get to NFP, this is just the Treasury part so far.
Yeah.
And then we have Fed. Like, will they signal faster cuts? Will they signal balance sheet policy change? I think that's happening. I think that's coming. Last time, I don't think we talked about the cash, or did we? So we estimated there's like a 1.1 trillion in excess liquidity that needs to be taken away from with QT.
Yeah.
Issuance is going to eat into that. And so they can start seriously talking about tapering down QT.
But do you think they're
the
gonna
time-
start? They start next week already about talking.
Yes,
about
so I think we will get the balance sheet commentary about maybe April, maybe May, maybe June, like the QT timeline, taper timeline. We will get that from the Fed, and they will also comment about the rate outlook. Like, when are they thinking about cutting? Is it March? Is it May? I think it's going to be May. I think March is a bit too soon. But yes, we will get big news from the Fed as well.
Mm. Yeah, and then we still got NFP next week, Friday.
And then we have NFP,
which is gonna be a big one because that is the first employment data from New Year, from 2024.
Yeah.
So that is gonna be a big thing as well, because that is sort of the last point we have to get right. We have to get some loosening in the market, in the labor market, to get bonds really starting, in my opinion. Because
yes.
If that is not loosening up, there is always going to be this little fear of second round inflation.
Yeah, second round of inflation resurgence
because of wage data. And I truly think that the FOMC wants to see that loosening in the labor market as well, as they're not going to cut too much, in my opinion.
Yeah, and they were also saying that one of the Fed speakers was saying that anecdotal data is very important right now. So this data is one thing. Another thing is that they're hearing from their contacts. They're talking to these business people in their districts and stuff. What they're hearing from them, one of the Fed speakers is recently flagging it as super important. So the trend seems to be like the labor market is okay. So it will not, I don't think a single NFP print can change it dramatically. NFP can confirm this idea, or NFP can put a doubt to this idea, but to make people think that inflation is resurging, I think it will take the bar is high. Bar is really high for people to think that.
Yeah, the problem I think is that there is no data yet or confirming that there is a losing in the labor market. So I'm not sure if we should actually bet against that.
Yeah, like a lot of the word of mouth anecdotal stuff that they're hearing seems to be confirming it, but yes. Yeah, but the potential is there for bonds,
Yeah,
everything to go right or a lot of things to go wrong. Like, NFP comes hot, Yellen starts leaning on the long end, buyback program is a disappointment. Fed says, no, we're not cutting, we're afraid of inflation, and the bonds can like drop 10%.
they can dump quite a bit. I mean, I can, if I'm
Someone,
just looking at the 10-year, I can see it go back here,
yeah, like
62% easily.
someone was like a week ago, someone was betting like 15 million in options on 10-year going to 4.5 in February.
Could be.
Like 15 million, like that was actually causing like intraday, the dealers have to hedge that with futures. So that was causing like a big movement intraday because someone was betting like 15 million bucks just in options. Like
Mm.
that's probably going to be like a 30-40 billion nominal bonds.
Yeah, but I mean,
So
if everything is going wrong, that could easily be, right? We could be there next
easily,
week, Friday,
yeah,
right?
yeah,
That is
yeah.
that
We
is
could
no
be
joke.
talking about, oh shit, here we are.
Yeah, that is no joke. I mean, we can easily be up there. I mean, 4.5%. That is still below the 62% Fibonacci level of the last rally from the last quarter.
Yeah,
And that could
yeah,
easily hit next week Friday if things go just a touch wrong. It
yeah,
doesn't even have to be nuts wrong, but just a tiny bit wrong, right?
yeah.
But on the other hand, if everything is going right for bonds, then we can easily go down here to 3.8%
The
next week as
problem
well.
is, I would be more confident if we were getting some help from the data, and we are not getting any help from the data. We're getting the opposite of help from the data.
I think the biggest problem could really occur if, let's say, Monday is going to be optimistic, then Treasury funding is going to be optimistic on Wednesday, but then
Yeah,
FMC is going to drop the ball and it's going to be hawkish, and then NFP is going to be hawkish as well. So contradicting data again would just be horrible for trading.
yeah, yeah.
So yeah, so just finalizing, summarizing bonds. It's gonna be a big week, really
A
big week,
huge week,
and
huge week.
it's just gonna be
Like
headaches.
think the October to November change of the last quarter and what kind of moves happened right after that
Yeah,
into year end. Maybe not as big, maybe not as important because prices are not as depressed here, but nevertheless, you have a huge week coming up.
yeah. We also have to talk about positioning in the bond market. I think there is still a lot of
I think
shorts.
it's good for both ways here.
Yeah, I think many people are still loaded on shorts just because I
Yes,
don't know
they
they,
are.
they, they didn't close it out or whatever. But at the same time, I think that there was a lot of FOMOing into the rally, into year
Yes.
end. So I think there is also
Yeah.
a lot of longs already in the bond
Yeah.
market.
So like the 10-year future shorts were hitting a record like last week or
Yeah,
something like that. But also people bought a lot last quarter. So I think like even on the chart here, on the trend, we are ready to go either direction. I think
mm,
positioning and the location and price is neutral. So we're just event dependent, I think.
yeah. But what I mean is really that the stakes are higher now than it was like a quarter
Oh
before.
yeah. Oh yeah.
So
Oh yeah. Quarter ago, we were just looking for an excuse to buy, for
yeah,
an excuse to go up
exactly.
because everything prices were too depressed.
Yeah,
Now we're good to go either way.
yeah. But that's what I mean. Like we're loaded on both sides. So if we're
Yeah.
going, we're probably just going, and we just
Yeah.
don't stop probably. So this is really important if we get a breakout now and
Yeah.
confirmed by data and confirmed by the events, then we're probably just good to go in one direction, whatever
Let
direction
me
it
give
is.
my own base case. I think things are going to be fine.
I think so as well.
That's why I'm loaded up on calls.
Yeah, I have to load on calls as well. I'm probably gonna do that on Monday, early Monday.
Yeah,
Didn't do it today.
Monday, like 3 p.m., you will get the
Yeah,
first refunding input uh, estimates. You will have time. The market is still
yeah.
open. You will
I'm
have
gonna have
time.
time, more than enough time to load up on Monday. But
You will have more
I'm
than
gonna
enough
do that.
time.
I'm probably gonna look at the one thing we gonna load up because that's what you loaded up as well. TLT, for
Yeah,
20-year bonds, US bonds. I'm probably gonna load up on 100 calls again because
yeah,
that's some good level, and I'm gonna do 105 and 110 as well, and I'm going with the March options. I think there is enough time.
yeah.
Probably looking at February as well. I don't know what the expiry is there.
Should Something is wrong with your chart.
Why?
Like 2023 highs, you're seeing as 105, right? 2023 highs were 108.85.
Yeah,
I remember.
we had that last podcast as well. That is just the chart from
Yeah,
TradingView, and there's a bit of
yeah. I
difference
think
in there.
TradingView is uh, normalizing it by removing dividends. I think that's what's happening.
It could be. It could be.
So this is like a purely futures move. So
Yeah.
this is pure price, but
Yeah.
the
Yeah.
one I use including dividends.
Yeah.
So that makes sense.
Yeah, my trading platform is different as well, but I'm just, just want to put it up here on TradingView so everybody
Yeah.
can look at it. But that's fine. So I'm just gonna load up 100, 105, 110, and I'm fine. That should be way out the money, way enough out the money as well. If we get a good move, it should move, and we should hit it. Next thing I want to look at is the US dollar, because that is for me, as FX trader, mostly FX trader, quite interesting. We had a rally,
Yeah.
a little bit of a rally here from sort of one range into the other, and then this week it was just up and down, chopped around all week long, and it looks like we kind of settled flat on the week, sort of a bit up, sort of flat, which is quite surprising because we had sort of bad data from other countries, like namely European countries.
Look at oil.
Yeah, we're gonna look at oil as well.
Oil is at almost 78 now.
Yeah, it's going. It is going, and it makes sense. I mean, oil is up on, in my opinion, on the Red Sea.
Yeah.
Drama that is unfolding. We also had a bit of sort of war headlines with
Yeah, like Iran was doing some shit.
Israel and Iran, exactly.
Yeah.
They're not best friends, to say at least.
Yeah.
And yeah, things look like escalating a bit, but in my opinion, it's just delayed reaction.
I think it's gonna be temporary.
Yeah, I think so too, and I think it's just delayed reaction from the Red Sea. I mean,
Yeah.
it's more or less an obvious trade to buy oil on the Red Sea headlines. I mean, tankers not going through the Red Sea anymore. That is just bullish oil, right? So I don't know why it didn't break out earlier. That is my thought to it. Right?
Like, why did we start moving like recently, not when everything was heating up?
I have no idea, but that is what I mean. I think it's just a delayed reaction to the Red Sea, and I have no idea why
I don't buy this rally. I don't buy this rally. I think this is going to reverse. Maybe not today, but in a couple of weeks, I think this will reverse.
Yeah, we're probably going up here to 80, and then going down a bit again into the range. Just ranging a bit.
Saudi Arabia is tanking so much of voluntary supply cuts, and they were planning to stop them from what, March. They were going to taper their voluntary cuts, and Russia as well. So there's more supply coming soon.
I'm not sure if they not just continue those cuts, voluntary cuts.
Yeah, last quarter they committed to tapering voluntary cuts. Like, I mean, everybody else is not playing along with Saudi Arabia. There's bickering about the quotas and stuff. Meanwhile, Saudi Arabia is cutting like 1.5 million in voluntary barrels per day and Russia is doing something like 800,000 or something. So that's a lot of revenue lost. So I think that is coming back. I don't see much upside for oil unless something good happens in China.
China came back. We have to talk about that as well.
Yeah, tough situation.
I mean, you are the big China bull, so you have to have some words for it. I mean, you bought
MCHI.
So that is coming back a bit from like 35, 39 now. 38.
Yeah, we're still down plenty on the year to date.
Yeah, quite a bit.
Like the things in China are crazy. They're buying US ETFs with 47% premium to underlying.
Because you have to say, they bought the Nikkei quite a bit above premium, like what?
Yeah, it was like 20% for Nikkei. Yeah.
And then
47% for US ETFs.
Yeah, they halted the trading on a Nikkei for Chinese people, right? On ETF.
Yeah.
So what did they do? They just switched to the yes ones. That's why I just fucking
No,
buy
no, they're also
EQE.
halting US ones as well.
Yeah,
They're
now.
halting them simultaneously.
Yeah,
Yeah.
yeah.
Like it's
Just
like a capital flight, you
crazy.
know. Money doesn't want to be in China anymore.
Yeah, but I don't know why. I really
Confidence
don't
has been
understand that.
lost in everything. The property market, stock market, no confidence in anything. China money just wants to get out.
Yeah.
And you know they have capital control, so you cannot actually take money out easily. So they're just putting this in foreign assets
Mm.
that they can still access, like these ETFs.
Yeah.
Like there's a huge confidence crisis in China. Maybe central government can change something with their. I mean, they actually planning to do something about it now. Will it be enough? I hope so. Let's see. But I stand by my long-term view. I think things are going to be just fine in the long
Yeah.
run, and these are gonna. This is like a great value area.
I mean,
But we will see.
they teased the 50 basis points cut from the RRR, right? So they're
That's just,
cutting
that
50
gives like
bit.
1 trillion RMB liquidity into the system.
It's not a
Who
lot.
cares?
It's not a lot, but it's a start, right?
And
I mean,
it's liquidity. It's like it's not even like QE. You know, it's not forced
no.
injection. It's just available liquidity.
Mm,
There has to be loan demand for that liquidity to be taken up. It
yes.
doesn't change much. Like they want, like the actual thing was they were planning to set up like a 300 billion ish fund to actually buy back
Yeah,
stock with.
buyback
Now
program. Yeah.
that was good.
What I'm looking as well is this one. Um, Dollar yuan. Why? If things are going good and if they are going to cut down on rates and do
Yeah,
a
I don't
buyback
see
program,
I don't
whatever's,
see the case for strengthening CNH. I don't see the case for it
no,
to
I don't
strengthen.
see it as well. And that's why I think there is a bit of upside here. Because, I mean, this was manipulation to the downside, right? Late last year. It was obvious and it
Yeah,
was manipulation and
yeah.
they said it. But that is over, right? And I'm honestly thinking, I mean, there was a bit of a rally here because of, money flowing back into China a bit this week.
Mhm.
And I bought right there, so like 7.17 around there. And I think we have
Mhm.
some room to go up here to probably 7.3 again, like free money.
This is
Because,
the main place they're controlling. Okay, they were like ignoring everything else, but the exchange rate is something they've been leaning on. Like
yeah,
the
but I
central
think,
government was leaning on the exchange rate.
I don't think it's going to strengthen. And I think they're going to let it run a bit until
Yeah, I
7.3.
mean, by the normal market principles, you're absolutely right. But you're also fighting the government here. Like they might be not paying attention to other places in the market. They might not be interfering in other places in the market. This is what they're interfering with. So yeah, by market principle, I agree with you. Is that gonna be enough to overcome the government? Probably, but I don't know.
I just need them to hold back with manipulation until like 7.3, right? I
Yeah,
just want this drop to be faded and then I'm out. Right? So around 7.3, I'm going to take profit. It's not too much of a big bet, but it's going to be a couple percent if we go up here. So I'm fine with that. So yeah,
yeah.
that
Let's
is
see.
just
Let's see if
one
there's
thing I'm
something
looking at.
happens over the weekend or early next week. I'm watching China.
Yeah.
Hopefully, they deliver something. We shall see.
Dollar yen, still bullish on it. Buy the fucking dip. As long as the BOJ isn't changing anything, risk is flying still. Buy dollar yen. In my opinion, whenever there's a dip, just buy it. I did it this week as well, paid off well last week already. So it's just buy the dip until we probably hit 150 again, and I'm getting a bit more anxious. But at the moment, or cautious. But at the moment, just buy the dip. Euro dollar, just sell it. Right. I don't think there's any other option than just sell it really. On euro dollar, it's still holding up above 108, and I have no idea why. So crazy. It should be down to 105 at least in the first quarter, in my opinion.
Oh, 111 recently, so you can count yourself lucky, you know. I think they were just year-end flows out of the dollar.
Probably, Probably. I have no idea. But that thing should just tank, over the couple next weeks.
So the next week's rate events are gonna hit this as well, big time.
Yeah, a lot depends. I mean, the dollar depends a lot on the bonds as well, right? If bonds
Yeah,
go
especially the front
well,
rate.
yeah, if bonds are going well, dollar has probably pretty limited upside still. If
So we are
things
pricing in 120. Okay,
have
133 minus 8.
100,
125 basis point cuts for the December
I
2024.
think it was a bit more. I think it was 138 or something like that earlier today.
Like, okay, right now the December rate is 4.08. So current effective rate is 5.33. So that's 125 basis point difference between now
Hmm.
and December for the Fed fund futures.
Yeah, but that is probably, I mean, that really depends on data, right? If data is
Yeah,
just hot,
yeah,
then it's
yeah.
probably
That's
too
five
much.
cuts basically. That's five cuts, and
Yeah,
a lot of people agree it's either going to be like 3, 4, 5. We are in that range, 75, 100, 125. But all of that is way too far. We'll get tons of data in between.
yeah. If shit is hitting the fan, it's gonna be way more than 5 cuts. We all agree on that, probably.
Yeah.
But
Yeah, but we don't see any reason for shit to hit the fan at the moment.
no,
Everything seems to
not
be
at
just
all.
fine.
And that is why if we look, oh man, I'm gonna look at my favorite thing here. Nasdaq. We
Yeah.
had we had new all-time highs everywhere across the board. Nasdaq hitting 17,700 something on the mini futures. What
Yeah.
actually can stop this thing, right? What can stop equities? I have no idea. We had some earnings.
Yeah.
We had some earnings this week. We have some more earnings next week.
Yeah, we have the peak earnings, well, except for Nvidia, Tuesday and Thursday. Like we're getting the Magnificent Seven earnings next week. Apple, Google, and Microsoft on Tuesday. Apple, Amazon, Facebook on Thursday. Yes, and Nvidia should be in February, farther out.
Yeah. We had some big ones. We had Tesla. We had some Visa. I think.
Yeah, Visa is doing great. They
Visa
have
is
like
doing great.
9% revenue
9%
growth.
growth. No idea where they're pulling this
9%
from.
growth. That's crazy.
I don't know where
Revenue growth for
they're getting
Visa.
it
It's
from.
not like
I don't know how they do it, but they somehow pull it off. I have no idea why. Where? No idea.
Yeah.
Tesla had some really, really shit numbers actually. Musk is trying to talk it up with some promises from whatever
still-
end of 2025 and beyond. No idea
Yeah.
how this should work out, but it should trade around 150, maybe to 100.
Yeah,
And
it should trade around like 30 or something.
yeah, it would still be way overvalued probably at 100. Right, and that is no idea how. Yeah, no idea. We had
Yeah, let it do its thing.
oh shit. Right. We had last time we talked about in the podcast. We had Jesus. We had Bitcoin ETF just coming up, right? That was last time we talked about it. There was
We're rallying right now.
so we are rallying back a bit after we dropped down a bit in the first couple days after the ETF launched.
Didn't we rally last Friday as well?
Sorry.
Look at last Friday on the chart. Which day is last Friday?
Last Friday. Let me check. Was Sunday, Saturday? This one here. It was a little rally. From a little. It was first a sell-off and then a rally back. But it was nothing like today. Like today was just pure buying. Right?
Yeah. Let it do its thing.
Well, are we bullish on it? Long term, probably yes. Short term,
Long term, probably yes. I think so. I think the liquidity is just gonna keep coming.
probably right. Short term.
I mean, even as these, Bitcoin believers, they have other assets as well. As they get richer, they put more of their money into Bitcoin. There's limited supply.
Yeah.
That liquidity injection, I think, will drive Bitcoin price higher in the long run.
Yeah.
Well,
I think so.
all of the Bitcoiners, the main thing that drives all of their arguments is the hard limit of supply. And as the actual fiat money grows, as like fiat-based wealth grows, the credit money goes into the hard money, and the hard money value appreciates versus the credit money.
Yeah.
So that's the basis of the argument.
And it's a good argument, actually. Can't tell anything against it. Gold.
Yeah, I think. Yeah, seasonality is finished. And it didn't work this year.
I
The
think so as
January
well.
seasonality. And the next move, like the Chinese stock sell-off led to gold sell-off as well. So Jack was speculating that the Chinese are actually selling gold. They bought a lot to cover their margin requirements and whatnot.
That would actually make sense. That would make sense.
Mhm.
But what that would mean whenever the Chinese market is going up, gold is going to go down, right?
Yeah, go up.
Oh, sorry,
So
no,
they're
go
gonna
up.
buy back.
Yeah.
Yeah,
I'm buying
they
it
were
back.
like, it was like a liquidation-induced gold selling as well. That's what he was speculating. But the next move is probably again rate dependent. What happens to real rates?
Yeah, next week. Bonds up,
Yeah,
gold up as well. Bonds down,
yeah.
gold down as
Like
well.
everything, we're just preparing for next week since CPI. Like we've been preparing for the upcoming deluge of events and data.
I have to agree, and I'm still so undecided. I think probably there is a big one-sided risk in bonds at the moment, in my opinion, because I think everybody was just selling bonds and US dollar as well at the same time, just as sort of hedge for next week, not to get too cute with it, and then gonna buy back next week.
It's quite
everything is over.
asymmetrical towards bond strength. The balance of probabilities, I think, is asymmetrically leaning towards a good outcome for bonds.
Yes, I think so as well. But the critical thing here is that I think, the correlation between bonds and US dollar and probably all other assets as well is skewed to buyback of everything, bonds, US dollar, probably gold as well. So like bonds going up doesn't mean gold going up as well with the usual correlation. That is what I mean.
Yeah.
And stocks probably not flying as high as well, even if bonds
because
go
they're
up.
already flying.
Yes. So I think there is like, the usual correlation between bonds and the other assets is just skewed to the other side, like hedge unwinding, if that makes any sense. But I think that is what's happening next week. So bonds up.
Yeah.
Bonds up.
I mean, we can't speculate any further. We will see what happens. We will take it one day at a time, one piece of data at a time.
Definitely.
Yeah, but I think we covered what needs to be covered. Like next week, Monday, Wednesday, Friday.
Yeah.
Starting from Monday, getting a little bit of a taste with the refund, quarterly estimates. Wednesday, refunding, buyback, FOMC, Friday, NFP. And we will see you all probably next Friday, 3 p.m. EST again, after we get everything for the week.
I gotta see how much time I have next week, but I'm thinking about making sort of a standalone in between live sessions as well.
For each event? Yeah, that makes sense.
Probably. So like Monday, Wednesday for the FOMC session, and then Friday for NFP as well, and then later.
I'll be here on Friday after everything is done.
Then we can make the regular podcast as well again. Probably
again we can go through everything that happened.
Yeah, that makes a lot of sense. To come to a conclusion, probably, I think Calvin is here as well. Do you have any questions, Calvin, or anyone else? I think there's.
I'm pretty online with everything you guys are saying.
No questions.
I didn't catch that.
No, I just said I'm pretty online with everything you guys are saying.
Oh, okay. All right then. See you guys next week.
See
Have
you
a
guys
good
next
weekend.
week. Have a good one. Take care out there.
Yeah.
And be
Bye.
prepared for one of the biggest weeks probably in
Yeah.
the year.
It's a huge
That's
week.
it. Interesting. Yeah.
Okay, guys. Take care. Bye bye.
Yeah. All right. Bye.